I'm glad you're with us. David Morgan joins us now from Silver Investor. Great always to have David join us. David, let me just start with getting your quick perspective on what is going on in the precious metals market, maybe with an emphasis on silver, but what's going on out there?
Well, to me, it looks like we still have a long consolidation, and I think it's going to continue for a few months. I know there's lots of arguments out there that the bottom's in and it could be launching, imminently the month of April, and that's a possibility. For my work, I don't see it that way. I see a broader trading range, but I don't see any significant movements in the metals, meaning above $1,900 in gold and, say, above the $40 level in silver. So we'd probably get into the September time frame.
So you're talking about, a longer time period here to take a rest. And again, I think that's by the way, you have been very, very accurate on what you thought the metals were going to do in this last period. And it's unusual to find that. Everybody should get this. David focuses on the precious metals. He's probably the best known silver analyst in North America. But, way too often I find people in that side of the business is just simply cheerleaders for this, where David doesn't do that. He just sort of calls what his analysis does and has served us very well on this show over the last number of years. But this isn't a new kind of prognostication for you, Dave, that you have made it very clear, even in this sort of heady September period where people are, kind of getting a little enthusiastic, and before that, I might add, but you were saying, no, you were looking for this kind of a take a break period.
Exactly, and I think I coined the phrase, not that it's important if I coined it or not, but we had the first major consolidation several years ago, and I was on another program like yours, and I said, we're in a phase of scare you out or wear you out, and they, picked up on that phraseology, because what happens is you get into this overbought mode temporarily. I firmly believe the metals are going far higher in paper terms, but they can get ahead of themselves from time to time, regardless of the manipulation. So, for an example, gold did the 1550 to 1900, but silver did even better than that. Basically, QE2 was announced. Silver was hovering around the $25 level. It went up to 48. It almost doubled after the announcement of QE2 in a very short time frame. Then it peaked and got slammed down. If you recall, Mike, it went down to around 33 very, very rapidly. Well, that's to scare you out. I mean, anyone that's leveraged, it's in the 40, 42, 45 range, and it goes down to 33 within a week and a half. They're out. I mean, they're scared out. They'll probably never come back in the market. That's to scare you out. The wear you out is when that correction consolidates month after month after month. So the guys that are buy and hold and the gals that are buy and hold held it. Maybe they bought it at 38, and it went all the way to 48, and now it's under 38. So they're holding. But month after month after month, it's below 38, right? And so this wears them out. They get tired. And this is a typical bull market psychology. The bull will shake off as many people as it possibly can. I had a consultation yesterday with the guy that got in relatively early, and he's held all the way up. And he told me the amount he put in, and he's up about 600%. But he got in relatively early, but he didn't pay a lot of attention to these massive corrections. And believe me, they're hard to ride out, especially if you use leverage, especially if you're mining equities. I understand all that. It's my business. I make a living doing this. But nonetheless, as you said, I call them as I see them. That's what I see going on right now, and I think it's going to continue, unfortunately, for a few more months.
It's interesting. You just mentioned, geopolitical events and government have had such a hand in what's gone on in the market. That period, again, this is off the top of my head, but when we were moving in sort of parts of 2009 and 2010 with that printing of money, quantitative easing too, it looks like the market's responding every moment to whether there's going to be a quantitative easing 3. In other words, another massive printing of money, because the last time round, we saw commodities in general, and silver and gold, both goosed dramatically in that period as we went through to April of 2011. What's your take on that? I mean, so you can have we can do some proper analysis, and then all of a sudden the government pops in out of the blue and says, now we're going to do this. I'm just wondering what's your perspective on that right now. Are we going further with this?
Well, Mario, it's a great question, and it's one that, a lot of experience in the metals, and it's going to be a contradictory answer, but I'm going to try to make it clear. I'm going to do it, from the heart and the head, and try to help everybody. Certainly, the political spectrum plays a great deal into the metals markets, all markets really, and particularly the metals, because they're the most emotional, and people understand what's going on, understand that they're real money. And because of that, they can certainly influence it. The problem is that at times it doesn't work. In other words, there are times when a geopolitical event takes place that would send gold up limit 3 days in a row, and it does not react that way. I found that one out the hard way back in my 30s when there was a lot going on in the Middle East at the time, and gold wasn't reacting at all, and it started to question this, manipulation. I didn't use the word then. I didn't even understand it. It just was, I knew in my heart of hearts something was drastically wrong. Gold had to react. So the point I'm making is you cannot always bet on a geopolitical event moving the metals in the direction that is absolutely logical. You've got to look at it from the perspective of it could move the metals or it should move the metals, but not necessarily that it would move the metals. Now, that is something that really bothers people. But the metals markets, or all markets, are the markets. And I've always maintained that the markets are smarter than anybody. Sometimes there's a delay. Sometimes it moves the opposite direction. I mean, let's take a classic example from recent times that probably all of your listeners know about, the silver market. I mean, what was going on with Bernanke and Dr. Ron Paul, which is a video on my website, I mean, silver had no reason to sell off the amount that it sold off. It sold off 110,000 contracts. The price moved down about $4 intraday, and it closed down $2.50 for the day. And then nothing had fundamentally changed in the metals market, but there was a huge sell-off in the paper markets, and this takes place in silver particularly. So this is things that really couldn't be predicted. I mean, there's no way that I can sit here, even with technical work, fundamental analysis, all that I do, or anyone does, and say, on this day it's going to get hammered. The Commitment of Traders report was giving us clues that it was probably time for a sell-off, but not as drastic as what we experienced.
Yeah, and haven't we been suffering with exactly that kind of stuff the whole time? As you say, you can get some indicators in advance, but for me, the geopolitical events and the way we've had such central bank intervention has been very difficult for investors. Let me ask about another thing that's been difficult, David, is the sort of disconnect between the price of the precious metals, it might be gold or silver, it might be platinum, and the stock performance, which has been significantly worse in most cases. Still, you were talking about silver at $31, $32, which other than a year and a half ago would have seemed like a dream come true, or gold at $1,650 to $1,700, again, a dream come true, but yet we see the stocks languishing at numbers that used to be far lower than that. So what about that disconnect?
Very, very discouraging. I'm well invested in the mine equities. In fact, that's probably what we emphasize. We look at, the metals markets and a lot covered. But it's very disappointing. What I do know for a fact is that they're so undervalued that it wouldn't make a lot of sense to sell them here if you're holding at higher prices. If you have the ability to accumulate more, I really believe you should. And I really think that this is the area of true value now. I talked to a couple rather large money manager types in the last 10 days, and both of them have stopped purchasing physical and are moving only into the equities because that's where the value is. Knowing that and having the courage to move into it are two different things. A lot of people, again, like the scare you out, wear you out phrase that we talked about a moment ago. It's tough to get in when it seems like it's never going to go up. But I think this is a good precursor or a good showing of what's going on in the market. Here's my analysis. The metals themselves are off, yes, but they're not off that much relative to their highs. Yes, the percentages are fairly down, but they're holding pretty darn strong. And yet the equities are not. And what that shows is that this discontinuity, they will catch up. Markets do not like these inequities for long periods of time. So I, myself, am buying more on the equity side. You have to have patience. If I'm correct in the time frame, you're going to have another probably 3 or 4 months of good buying opportunities here. And I think 2 to 3 years from now, Michael, it's going to be the opposite. Instead of seeing that the metals are up, and they will be, that the equities, instead of being below or undervalued relative to the metals, will be overvalued relative to the metals. Now, no one can guarantee that statement, but the last time we had a major bull market, we saw the equities outperform the metals at certain times in the market, and we've yet to see that in a substantial way. What I think is going to happen, Michael, is that people that are late to the party. So let's just make an assumption that I'm right about gold going over 1,900 and silver over 40, let's say by the end of September this year. Now that's new highs for gold, and silver's approaching its old high, in nominal terms, of course. People that are late party.
Sorry, David, I was just going to say, people who were late, to the party?
People that are late to the party, people that have been watching this as entertainment, and they actually get motivated to take some action, will say, I really want to pay $2,000 for an ounce of gold because, $1,900 plus a dealer's markup, which he has to have. $2,000 for one coin. Geez, those coins are pretty small. I'm going to buy the gold stocks. And this is what is going to happen in my view. The psychology is going to shift to all the latecomers to buy the gold stocks and the silver stocks. And that new buying is going to build a floor and start moving the prices up and up and up. Remember, all markets move on buying and selling pressure. We need new buying pressure in this market. There isn't any right now. Some of the funds are buying into the equity slowly. They know not to buy large amounts or they'll move the market. They want to accumulate at these levels. But once the public comes into the market in force, and I believe that, again, probably before the end of this year, you'll start to see this as a base, a floor. It'll start to move up, and it's going to continue, in my view, probably up into the next leg. So I'm not that discouraged. I know it's tough, but
let me hold you at that, David, just because we've got to take a break here. David Morgan, silver-investor.com. I'm glad you're with us. Coming up, I've got Ozzie Jurek. He's going to be talking about why Calgary right now. Hey, if you're living in Calgary or Alberta and other parts, you're looking for an investment opportunity in real estate, I'll ask Ozzie why he thinks Calgary might be a good bet. Right now, though, I've got David Morgan on with me, www.silver-investor.com. David, one of the premier silver analysts and precious metal analysts in North America, joins me now. David, let me just ask you, we were talking just a few moments ago about the disconnect between the price of the metals and the actual stock price themselves. But I want to this is one of those periods then that if people do not have, they want to have a better exposure to this area of the marketplace, it's maybe a time to compile a pretty good list. And I don't want to preempt what you write in your newsletter, but I wouldn't mind getting a little perspective on you. And let's talk about the seniors just for a sec. I mean, we could talk about Majestic or Silver Standard or Pan American. Is that the way to go if I'm looking for a senior producer right now? Or do I look at something like Goldcorp, which has a huge silver component that I don't think gets recognized by the market?
Well, all those names I like, and I think I own every one that you mentioned. I like Goldcorp. It's been one that we've held for a very long time. We have sort of a mixed philosophy at the Morgan Report. I mean, what I taught and still do is that in a major bull market like this, you can get into the major stocks and buy and hold them all the way up. What I also do is I tell our members which of those companies are performing better than the rest. So since we started the buy and hold, this is for the seniors only, by the way. Everyone should have a stop loss. I mean, there's no such thing as a perfect investment, and you need to diversify within the top list. But we've only had maybe 10 or 12 that have ever hit that. And for the most part, all of those are buy and hold to this day. But coming back to your specific question, I think Goldcorp is one of the best. It's certainly hit the top tier list by our metric many, 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 many times, and it continues to look good to us long term. And you are correct, Michael. There's a few companies like that are not getting the recognition for their silver projects that I think they deserve.
Well, it's, as I say, this is the time where it's sort of contrary to what a lot, I want to make a distinction here. Of course, if someone is a trader, they're looking for momentum and stuff like that. I'm talking about investors at this point. And people I would say, start with this idea of, do I have the level of exposure I want? If it's yes, well then, you're in a buy and hold situation. If you do not have that level, though, it's time to make a list of things. As David says in his work, he thinks that you've got sort of a time frame right now, the next 3-4 months, that you might look for some accumulation. Well, you need a list of stocks that you want to accumulate before they move. And I think that's the sort of phase that we may well be in for that, if that's indeed I'm describing your portfolio approach right now. But it is interesting. It's people have trouble with this, Dave. I love when they put quality stocks on sale in areas that I want to have an investment in. And that's what I'm sort of seeing right now in the general precious metals markets.
Exactly. I mean, I'll give you a quick thumbnail. Let's take a minimum portfolio. Let's say that you're pretty conservative, but you like to speculate. So you could have a Goldcorp, a Silver Wheaton, and maybe a Pan American Silver as 3. Now, I suggest 6 as a minimum, but let's just take 3. And those stocks do well over the long term and have, and I think will continue to. But once in a while, the market does get ahead of itself, like we talked about earlier, where silver shot up and doubled in a matter of a few months. At those times, if you're savvy and you want to, you can actually rent your stock for a while. In other words, you can write covered calls, very conservative approach, maybe make 17% on an annualized basis. So maybe you rent your Gold Corp at a high price for 3 or 6 months out and capture that premium. If you're a big investor, and I don't mean that big, but I mean, let's say you have $50,000 in the market between those three companies, you might be able to yield maybe $10,000 on that pretty easily when the market's hot and everybody wants to buy. Well, maybe you want to sell a little bit or rent your stock, as I call it, right? The options. Now you have that $10,000. I take that $10,000 and move that into the highly speculative sector if you want to hit a home run. But I really like to bet a little to win a lot. Most people get it backwards, and Michael, I hope you have me back on the show, but I see it more in the Canadians than anywhere else, and I think it's primarily because you're such a mining capital world, and I love it, and I love everyone in Canada, and you know that, but particularly the Canadians seem to, in my opinion, overemphasize stocks that really have little merit when there's so many wonderful companies that are in Canada that have all kinds of merit. You want to buy the best. When you buy the best, you have a lot to work with, and you can do it in the manner I just outlined.
Yeah, I couldn't agree more with you, David. It's as I say, the opportunity is there. David, I want to thank you for taking the time with us. And Silver, it is a -investor.com, the Morgan Report with David Morgan. David, thanks so much for finding time with us. I hope we can visit again in the very near future.
Michael, it's always a pleasure. Thank you.